We usually start in time, and this is so people who joined us in time don't have to wait too long. Welcome on the Service Design Marathon. We have today the final and closing event of this months-long marathon. Service Design Marathon is organized by Ukrainian chapter of Service Design Network, and Service Design Network is the international community of service design enthusiasts, be them professionals, students, academia. You are welcome to join. You will become a part of a very interesting family. And basically, thanks to Service Design Network and the events they organize, I met Timo on one of the global conferences, and I am very happy that he decided to join our marathon and present the case of his agency. Timo is managing director of an agency called Hellon. They are working from offices in Helsinki and London, and they are working internationally. I believe they won, if not the most, but I believe more service design awards than any other agency. Timo, is it correct? Am I right?
Yeah, that is correct currently.
This is something you can definitely be proud of. So without like any further delay, I welcome you. Please, if you can tell us a little bit about yourself, and please, I'm looking forward because I know the case and I'm really interested in hearing the details.
Thank you, Oleg, and thank you, everyone. Good afternoon. So, as already mentioned, my name is Timo. I am the managing director and one of the founding partners of Hellon. We are a experience innovation service design agency founded in 2009. So we have over a decade of sort of design heritage behind us. And currently I'm leading our London studio and presenting from London today. What I'm presenting today is not actually one case study. It's actually a synthesis of some of the findings of multiple projects that we have done from North America to Europe to different countries. And these are all projects that have been on the financial services side. So we're looking at working with banks and insurance companies and so forth. And this is not a talk about saying that, you know, this is the new way going forward, or we are surfacing findings from our studies and sort of giving out some food for thought on opportunity areas for financial services providers, how to sort of improve their services when we know that there are changes happening in customer behavior. And I'd like to start this presentation with a short video and then a bit of a story behind something that happened to my design director here in London. And the video I'm going to show you is a very recent advertisement by one of the major banks that operates in UK and globally as well. And this is a very traditional way that banks want to portray themselves. So I'll play the video for you and let's see if it works.
When you think you're all alone, I'll wrap you up and I'll take you home. No matter what you're going through, I will look after you. When you don't know what you're gonna do, I will look after you. I will look after you.
This is something that a lot of banks we associate with very emotive videos talking about heritage, generations, being with you from your first steps into, you know, going on thin ice and you know, different things that you face in life. And this is sort of what we expect these traditional banking services to provide. And the slide here that I'm showing you is a different reality of this. And this is a story that, you know, doesn't really add up to being always by your side and helping in every situation. The digits that you see on the screen is regarding a personal experience from our design director. And they represent the exact minutes and seconds that his banking provider here in the UK gave him when he was exploring the biggest decision of his adult life. He was looking to get a mortgage, buy a house. He contacted his banking provider to get guidance in the process, sort of where do I start from, what are my options? And this is how long the phone call lasted. And basically the end result was, we can't really help you until you actually apply for a mortgage. And this is where we sort of see the reality is that we convey this image that, you know, always there with you, but today's world is different. And, you know, we have a hunger for information and we need to know things, and we're not getting the support and guidance that we need. And what it really means, though, even though that is a personal reflection, it's being confirmed by our work from sort of many directions. And what, as I mentioned, what we're presenting today is sort of, it is a synthesis of the work that we've done across US and Europe. And it's really about some food for thought. But what it means is that the current landscape in financial services, the customer journey doesn't work. And what we mean by the customer journey doesn't work is that sort of, this is a very, very good visual example of a journey that we have designed to one of our clients. It sort of represents an as-is view of a certain service that they have. And as you can see, sort of when very often in the beginning, when you start researching something, you're like, okay, I need a mortgage or I need a loan. You know, you explore these different options, and you know, there is this sort of surprise and excitement going on. You're curious about it. You're talking with people. You're envisioning your new life. And over, the indication of our research shows that once you actually step into the banking world and you contact the banking services, it's a trip to the unknown. You just don't know what's happening. The processes of the whole, you know, when you start going to a mortgage and getting these, whatever the services are sort of all low points, you know, in the customer journey. The customer experience is never really good, and it is a very emotive journey that we've noticed over and over again. And this sort of even emphasizes it a bit more. And this is part of a research on a project that we conducted in North America. And we asked during this research is there anything that makes you worry about money and finances now or in the future? And the people that responded to the survey, we basically identified three main areas. And the one area is that right now we are seeing new patterns emerging how people are spending. People are more accustomed to digitally native journeys, and we're stepping out of these patterns that we are accustomed to you know, in the previous years. Customers have less to spend, and we are crossing to unfamiliar patterns. But even more, something that is really prevalent in everything is that currently anxiety is running really high. Obviously, you know, taking the last year or year and a half, that goes without saying that, you know, there's been a lot of anxiety and instability. But this is also an observation even before COVID. People are seeking control, but there are so many things happening that are affecting our personal finances, you know, the services that are provided, that we just don't have the ability to understand it. And last but not the least, one major thing is that there has been such a great focus in user experience and digital services and digital self-service that many financial services have actually pushed their clients further away than they've ever been from their customers. And now there is a need to go beyond UX. We need to go beyond digital. We need to re-innovate, we need to transform, and we need to come up with new ways to engage with our customers, because currently we are not engaging with our customers at all. And this sort of emphasizes another dimension of our research. When we asked our sort of research participants that what role would you like the bank to have in your life? And we're talking about traditional banking services. First of all, less than 20% said that they find banks inspiring in any way. So there is no innovation happening in banks. And a staggering amount, over 80%, felt that banks are just there to manage money. Your salary goes in, digits change when you spend, and something goes out, but it's something sort of that you have to have, and it doesn't sort of play any other role. And this one quote from a US participant really sums it quite well, meaning that I am ambivalent to banks. It kind of serves what I need. It's there when I need it, but that's it. So we're lacking this inspiration. And I want to also emphasize that and I'll come back to this in a bit. There is happening innovation in banking services, but it's not happening in the right places. And what I mean with that is that it really comes to the fact that we trust banks. You know, we trust the brick and mortar banks, the HSBCs and the banks that have been there from 1,000 years ago. The banks have always been there. You trust to put your money in there. That's about it. They don't really help you generate money. You trust them when you need it. There is security and there is expertise. But on the same time, we are seeing these challenger banks coming in, you know, the Monzos, the Flowies, the Revoluts, the N26s, and all of these. And these banks are revolutionizing everyday banking. So even though they're not offering a wide range of banking services, like, you know, these challenger banks are not doing a lot of mortgages, they're not doing loans, it's just the everyday banking. But what they have been able to do is something that the traditional banks have not been able to do in a long time. They've displayed that banking can actually be easy, it can be humorous, it can be flexible, it's human, it's digitally native. And what this has again done is that it's changed the perception that we have towards traditional banks. If they can do it, why can't the traditional banks do it? Because they have an even wider offering. So if we think about the sort of current landscape in the financial services, it really comes to the question that, okay, we know that the journey is suffering a bit of a dip. You know, the experience is not really good when I'm dealing with traditional banks. They're not inspiring. So what's really gone wrong? And in order to understand what's gone wrong and why things are wrong, we need to take a bit of a trip down to history. We need to look at, these phenomenons from a longer time scale. And if we look at sort of different generations and go back sort of 50, 60 years and start all the way from, the baby boomers and Generation X, what we see here is a totally different type of life than what we're living today. People had a thing called jobs for life. Basically, it was very, very usual that you would keep the same job you'd work 45 years in the same company and retire from the same company. And during that sort of journey, get a mortgage and you have a house and you get some kids and maybe the kids move away. And basically changing jobs was less, it was less usual. And one other thing is that housing was actually affordable. People were able to get into the property ladder. And when we moved towards sort of the early 90s, life became all of a sudden a lot more precarious. It's unpredictable. Patchwork jobs became more common. Generation rent. All of a sudden, people weren't buying, people were renting for a long time. People not necessarily ever owned their own houses. Buying houses became less and less reachable. And in general, there is sort of a more increased volatility and insecurity. And if we even sort of zoom in to this time area, and we might think that baby boomers had it maybe differently, but when we look at it more closely, this is currently an experience that everybody's gone through. Everybody that's sort of lived or been from the early 90s, we have seen this change, regardless of your age, your life situation, what you do. From the early 90s onwards, this is a reality that we're all getting accustomed to. Patchworking, short-term jobs is becoming more common. There is constantly still a lot of volatility. It's increasingly difficult to get on the property ladder anywhere. So, people are sort of already, when they're in the school, they think that I'm never going to be able to own something. And there are behavioral shifts happening. For instance, what we've seen right now, the pandemic, this has caused proper temporary or lasting behavioral shifts towards consuming and how we want to live and work and live. But the main issue here is generally managing finances, and the relationship that we have with money has become completely something else that it was when banks came up with their service offering. And this service offering hasn't been touched in ages. I mean, they have current savings accounts, they have investments, and then they have loans. That's pretty much what banks offer to us. And they still deliver the same services that they've always done, except life is a lot different than what it is. And going into another study that we conducted across the EU and a few European countries, we found out that 65% of all the people in this survey did not feel confident enough to manage their finances alone. With managing finances, I mean, yes, they might be able to, understand that money goes into their bank and pay things, but really sort of manage their finances, be comfortable in, investments, or sort of being able to actually, grow their wealth. And that's a staggering amount. More than 50% of the customers say that they only have a basic knowledge that allows me to carry out my everyday tasks. And while this is true in sort of personal finances, that we look at, individual consumers, when we explore the sort of entrepreneur side of this, sort of small business owners and other people, this same trend was evident. And one sort of crazy finding that we had was when we interviewed a lot of new entrepreneurs or people that were thinking about starting their business, the majority had asked their friends or colleagues for help in setting up their business accounts rather than approaching their own bank or their financial services provider, because they don't feel approachable anymore. They'd rather ask someone that they think knows a lot about finances. And what's even crazier is that approximately half of the times that they asked help from someone, they ended up choosing a different provider for their business banking than their own banks. So banks are losing customers because they are not approachable. And a common narrative throughout all of this, whether they are SMEs, individuals, entrepreneurs, is that people are indicating a sense of regret of not getting a good amount of education or understanding what to do with money or how to do with money. Basically, people are wishing that they started saving or understood how to save earlier and spent less. And one of the reasons can be that, if we go back into the history path and we think about the service offering, we identify that it's clear still that these traditional banks, the big HSBCs and the Lloyds and other global banks, they're still sort of built to serve a model where life was very linear and it was expected to play out in a certain way. You get your job and you buy and you rent, and all the propositions are playing around this. Because, for instance, if you are a entrepreneur or a freelancer and you try to get a mortgage, you're treated differently than someone that has a steady job, even though you as a freelancer might have a better financial situation, because you're perceived differently in the bank's own remits. A freelancer is not a stable profession. And the problem here is that they are still thinking that life is expected to play out in a certain way, when actually we know that it's not. It's extremely complex. Traditional career paths are not maybe applicable anymore. The journey we call life today is a winding path, beset by uncertainty. We study for longer periods of time. We might be unemployed in the middle, then we get a job. We decide we don't want that job. We take a career break and go to a different direction. Then we might get a new job. And the banking services, they are not set to sort of live across this type of winding journey. And this has led to the fact that there are so many things that affect the customer's relationship with money, especially in key life stages, that it's really difficult to sort of understand all the things and factors that are affecting my finances. So as already discussed, we're experiencing an sort of unparalleled age of anxiety with our finances. We have different global crises happening. There's cultural changes happening, there's climate crisis happening. And as a normal human being, we just don't have the sort of cognitive ability to keep up with understanding how these affect my finances. And financial literacy is something that has been highlighted time over time. And what it means that every year the world is becoming more complex. So we have a big responsibility in managing our own finances and great expectations towards our futures and savings. Yet the majority of people don't have a formal education. We don't have any education how to deal with money. It's almost like finances work like hand-me-downs. It's up to your parents to teach you the value of money. And, if you go and study business, you might learn, or you need to have a specific interest in learning this, because in primary school or any other, mandatory schooling, they don't talk about financial literacy or teaching you how to, manage your money. And finally, one of the most interesting things we have is that at the moment, the perception of money has changed fundamentally. Before, you'd go to the bank and you'd cash your check and, you'd have cash. I can't even remember the last time that I actually had cash, because everything is digital. Money has become a digit. It's intangible. No one really knows how it works. The digits change from bank to bank. Where does everything go? Do I actually even have all the money that I have? Can I go to the bank and take everything out in cash? And what it presents is this sort of two major divergent issues. One is that spending money, spending digit, it gives you instant gratification. Tap your card, you get something. Whereas saving and interesting doesn't give you instant gratification. And none of the banks are really telling you, how does it happen? There are no short-term goals. They're not explaining you. Yes, in theory, you put your money on a saving account, then it will increase. But the saving accounts are poor interest rates. There is no midterm goals. It's not been made visual for you. So basically, saving doesn't really reward you, whereas spending does. And the only way saving rewards you, if you are savvy enough to understand how managing your finances works. So obviously these are some of the findings that we've had from our studies, and we know that the journey is not perfect. But maybe the bigger question is that how do we fix this, or what opportunity areas are there for financial services provider? And if we look at sort of mainstream financial services, a traditional bank and the offering that a bank has, we can almost visualize it in some of this in this triangle. On top of this is the basic stuff. This is what all of us are relatively good at using. This is the way that we are accustomed to using banks, and interacting with them. This is the basic debit cards and credit cards. Then there are the other sort of offerings that banks have. We have the savings, the mortgages, and the loans. And this is something that you either interact as an individual with, or then as a business entity. And then the third thing is investing. And this is sort of, the actual part of investing, finances, and understanding, how do you grow your investments. And in the middle of all of this, that sort of interlaps with everything, is the whole sort of the scope of financial advice and wealth management, which touches all of this. And like my design director and colleague Andy's experience, the financial advice part, especially with the traditional banks, is not very approachable. And when we look at this triangle even more, the top part is something that the challenger banks are already doing really well. I mean, they are making normal banking, day-to-day banking, they're making it easy, fun. It's being, there's gamification. It's easy to open the bank account with a quick snap of your, photo. And it's, there's a lot of innovation happening up there. And this is maybe not the sort of focus area where traditional banks should be focusing on, because it's already been done really well. What we are sort of presenting here in sort of these opportunity areas is more on the other three. So what kind of opportunities might we have with the saving and the mortgages, the investments, and then the financial services side? Because I said that, the challenger banks have already done a really good job with this one. So one opportunity area is when we look at the side of sort of the mortgages and loans and so forth, one of the biggest opportunity area is that there is a huge need for innovation on the product offering for especially non-conventional businesses. It has time and time again in our qualitative research come up when we've interviewed, small to medium-sized enterprises. We've interviewed entrepreneurs, even high net worth individuals. We've found out that the offering that exists today is not fit for purpose for them. It's not flexible. It's almost non-existent for the modern entrepreneur, thinking about people that work in the gig economy or the flexible work, because these huge masses of people that are having stable work are not in the conventional box, and they're struggling to get the services really well. And one interesting thing is that many entrepreneurs that actually start their businesses, they use normal consumer accounts. And the reason is that, because they practice alternative modes of working, they feel invisible to the banks. They don't get the support, they're getting irrelevant support. And if they're asking for help, the banks are basically pushing them products and services that are not a match to their needs. So one of the most interesting things here that we found out is that sort of on the right-hand side, we have this graph. And this indicates the number of people that are sort of self-employed or in a gig economy in these markets. And this study we did in the UK, in the US, Finland, and Sweden. And there is a huge amount of people that are self-employed, are freelancers, are working in the gig economy, and traditional banks don't have service offerings for these people because they're still having the conventional way of working with this. So they don't even have business services. And there is a massive opportunity to serve for this demographic because it is underutilized. Another opportunity area that we looked into, and especially if we shift into the middle area, which is sort of wealth management, financial advice, and literacy, is a thing that we have heard time and time again, and in multiple, not only financial services, but all around the retail area. And it is what is happening in the retail channel, the brick and mortar channel. We know that shopping is going online, and when we talk with experts, they say that retail is dying, or we need to close physical manifestations of our services. They are being large costs and nobody uses these services anymore. People don't go to banks to cash their checks, and the majority of large banks, they have a lot of physical locations that are currently underserving or not serving a purpose that they should be. But when we look at the customer side, it's been surfaced many times that there is actually a new role to play. And because of the push that has been happening towards digital by all of these banks, we are further away from our banking providers than we've ever been before. Yet at the same time, we live in an age where there's more anxiety, more volatility, more questions that we have about our finances that we've ever had. We lack human to human encounters where we can get advice on difficult things, where someone can explain these services or what's available for me in my language, meaning in understandable terms, rather than me having to understand what the bank is saying. Because if you've ever looked at a loan agreement or a mortgage agreement, it's written in a way that is really difficult to understand. So clients are really, really looking for innovation in this area. And what we've seen is that we are dying to get some sort of offerings more on foresights, help people understand projections of my fund growth. If I put this money in X, Y, or Z, how is it going to play out? How is it going to work? Helping customers plan for long-term plans. They might say, okay, start investing when you're young and you can buy a house when you're old. It's not gratifying. I need to understand, are there short-term achievable goals? Are there something that I can actually get gratifying results from my savings? And banks are by nature, they are very reactive. You always need to go to them. Is there a way to, banks to be proactive, to look at your situation and recognize your behavioral patterns using customer data and approach customers saying that, did you know that you could save XYZ by doing something else? We need to be making saving and investments feel as tangible and rewarding as spending is, because currently it's not. And I think on the right-hand side, you'll see a benchmark picture. And this is by something called Blue Shore Financials in Canada. And what they have actually done is that they have created an innovative manifestation in the spatial realm, which basically is that they have established a network of these banking spas. And you can go in here, but you can't withdraw money. You can't do any of your sort of top triangle things. It's nothing to deal with your day-to-day bankings. But these are created to be, beautiful, immersive spaces that you get advice on your savings or your mortgages, and they have actually time to talk with you rather than to push you products. So it's actually been a way for them to pull people into the banking to learn more about their services rather than to stay and wait for customers to come in. And this has been extremely successful for them. So maybe this is an opportunity area for a lot of traditional banking, is to reinvent their retail and focus on education, financial advice, focus on management, because we know that people don't have the financial literacy to navigate this complex world that we're living today. And then last but not the least, of the three parts of the triangle that we are touching today, is the world of investments. And we've actually seen a good amount of innovation in this space. Unfortunately, none of these innovations are coming from traditional banks. You know, we are seeing a lot of apps that are sort of gamifying investments or simplifying investments or making investments approachable. There are sort of micro investment platforms that you can, you know, create an agreement that whenever you buy with your card, it rounds it up to the nearest full figure. So if you buy something for 69 cents, it's actually €1, and then, you know, 31 cents goes into an investment somewhere. So, you know, you can start investing, and it's gamifying this investment. But still, you know, there is a gap in this sort of investment, and the gap is relating to sort of what can we do in the realm of investment. And we know that investing is the gatekeeper into changing this perception that we have about banks. You know, it's about, you know, what are the possibilities that we have towards co-creating the futures, and what do we mean by that in this current setup where we live? So what I mean with this is that in this current setup where we are living and people are more and more aware of their surroundings, individuals increasingly demand more towards their service providers. You know, we want to deal with socially and environmentally responsible providers, and financial services providers must switch from focusing only the user to designing for sort of all spectrums of life. And one of these things is one sort of first step is concretizing really through the offering provided by the realm of investment. You know, we need to increasingly navigate these ethical anxieties. And I think a great example of this is an Italian, it's a challenger bank called Flowy. And they focus exclusively on the area of sustainability, meaning that everything they offer is considered from that angle. You know, if you make investments from them, their funds are ethical funds. You'll be investing in only products and services that have, you know, a sustainability agenda. You know that you're only supporting companies that share the same values as it. They're extremely transparent on everything, sort of their fees and their carbon footprints and you know, their sustainability agendas, and they have a full sort of ethical agenda into saving. So they educate their customers that every single you know, fund or investment is based on, one is that they will grow the assets, but they will grow the assets in an ethical way. They've been extremely successful, and a really nice manifestation is, yes, they offer, you know, the basic traditional services as well, the debit cards, but their debit cards are actually made out of wood, which is sort of promotes their sort of sustainability agenda as well. So if we start slightly wrapping up before, you know, having a bit of a conversation in the end, while these challenger banks are making everyday banking easy, we think that there is still a lot of space to innovate. There is a lot of opportunities that traditional financial services, these big, massive companies can do, because they have reach, they have a suite of services that challenger banks are not currently serving, and they have the opportunity to engage with customers, help them navigate this sort of very difficult time we are, And it's really in these three opportunity areas. It's in, making savings, mortgages, loans, basically redesigning their service offering from the customer's perspective, because currently it's not. They are underserving a massive market of people. It's looking at making investments tangible. It's making them rewarding, instantly gratifying, sort of gamifying it, or creating some sort of sustainable agendas around it. And at the same time, yes, it's true that they still need to make, the basic transactional accounts. They need to make it fun, they need to make it informal, and they need to make it easier. But ultimately, with these three opportunity areas, by pushing and innovating here, maybe we can fix the narrative, maybe we can help banks become more customer centric, and maybe we can create an offering that's actually tailored for today's customers. And that's pretty much some of our findings from the research. And as I mentioned, this is not one case study. This is our thinking, our findings, some things that we've shared with some of our clients. And the opportunity areas are definitely there. It's up for grab who really goes quick enough and takes sort of the headway in here. That's it.
Timo, that was great. Thank you. It resonates with some of our experience, and I'm happy to see here head of customer experience of several prominent Ukrainian banks. So I mean, they definitely would learn something from it, and this is an excellent food for thought. There is a good question from Oleg already. Is how do you think who will win, challengers or traditional banks? What do you think?
I think it's a tricky question. I think, if we look at the triangle, the top part, it's clear to say that the newer generations that are fully digitally native are very much playing in that space. I mean, their user accounts are growing really quickly. One thing that if I was a traditional bank, I would be quite alarmed is the fact that especially entrepreneurs and the people that are, looking at creating their businesses are actually turning into these service providers rather than even talking to their banking services providers. It's a bit of an unfair advantage at the moment. And we know that, as you mentioned, if there are people from prominent banks here, we know that innovation within large banks is really difficult. And the reason is because we have built the banking organizations upon legacy. It is legacy system upon legacy system, and there is internal red tape that is, even if we had the best idea, you would have someone in the organization say that we can't do it because our systems won't allow it, or so forth or so forth. So we have a legacy that is working against innovation. But at the same time, that's why we're saying that there are easier spaces to play with the customer experience, and there are easier ways to get back closer to the customer. So I don't think it's a question of who's going to win or not. I mean, for sure, we are dividing the market again. There is a division. But that said, whenever there is disruption in any industry, disruption doesn't happen every day. And if there's someone that says that they are a disruptor and every project is disruptive, I would argue against that, because disruption by nature means that it is a fundamental paradigm shift within the industry. It means that the whole ecosystem is disrupted and everybody needs to sort of recalibrate the way we're doing. These players have disrupted the financial services industry, and now everybody is sort of getting their bearings again. So yeah, it's a long story, and probably enough material for a full-on discussion for some other time.
Thank you. My take from your presentation, I want just to reconfirm it. And yes, I encourage everybody asking questions. This is a good opportunity. And if you struggle to formulate it in English, please do it in Russian. I'll help to translate it to Timo, or Ukrainian, of course. I want to play devil's advocate a little bit, because I mean, like you mentioned that the life of people has changed for sure. I mean, no doubt about it. But I mean, still, in the end of the day, the business of banks is very simple. You borrow money from some people or from the state bank, from the national bank, and then you lend it to other people one way or another. And maybe only investment is a little bit tricky because you would need to advise which, I don't know, stocks to choose. But otherwise, it's, I mean, it's very basic, and it doesn't really matter if I'm old or young, if I work permanently or not. I mean, still, it's all the same product. Why are you saying that the demand has changed? I mean, it all boils down to the interest rate, isn't it?
No, well, yes and no. I mean, what I'm saying with this is that the products in itself, I mean, we don't need to innovate the three triangles. We don't need to create new, you know, new versions of a triangle. Ultimately, the bank will always serve the same purposes, you know, and the business behind the bank is the same. The problem is that the way that the banks could make a lot more business if they were more flexible with their offering. So if I go to the bank and say that I'm someone that has been working for 15 years in the same job, I have a very sort of predictable flow of funds, and I know exactly what I'm you know, earning and so forth, the bank will like this say, this is how much money we can borrow you because we know that this is what you can do. Whereas then if you're an unemployed person that goes to the bank will basically say that, okay, either we're not going to borrow you any money or we'll give you a huge interest rate. And we have a lot of people working on non-conventional job profiles, which means that if you look at their, you know, the longitude data, their finances might have gone slightly up and down, but in the long run, they might be actually doing more money or better sort of trajectories than the traditionals, but the banks are not treating them on the same level because the bank will say, oh, you don't have a permanent job that you've been in 2 years, we'll give you higher interest rates. And this is where we need the service innovation. We need flexibility within the service offering. We need to redesign the service offering in order to allow us to look at people holistically around, you know, their life and their, you know, the way of working, because the gig economy is a big economy, you know, freelancing is a big economy, but they are not perceived as proper jobs or permanent professions, and they are then in a different situation than the banks. So it's not about saying that, you know, the devil's advocate is fine, but it's actually not about saying that the banks need to reinvent their business. The business is good, but they're missing out on a lot of people because the world is changing and they are still thinking that, well, our business is the same. Yeah, it's the same, but you're not serving to the clients that you could be serving to.
Thank you. I saw one more theme in your presentation. I just wanted to make sure I understood it correctly, that basically you don't need to innovate a loan, you need to innovate the way you provide the loan. So basically maybe not only to assess the possibility to take a loan differently, but maybe actually advising that this is the right time in your lifetime to take a loan because, well, not because the interest rate is low, but because this is a very logical decision right now to take a loan or not to take a loan this time because it's not sustainable for you personally.
Yeah, I think, I mean, it is that. One thing is that we know that, you know, banks will, funnily enough, you'll see banner ads on, you know, on your browser for banks and, you know, wealth services or something, and they'll push out sort of a shotgun approach in trying to get people to contact them. But they don't profile their customers enough to say that, hey, Timo, we've actually realized that based on your, you know, banking behavior, you could actually do this or that, and this would be a very good thing for you. Have you thought about XYZ? So it's a bit of both. So banks need to be more proactive in getting business. I think banks are still, you know, they are bricks and mortar banks for a reason. They've existed for a long time, and the tenet is the customer will come to me when they need something. Whereas if the bank would say that, you know, I profile and I understand my customer, I can actually offer them something and support them. That's one thing. And then the other thing is, it's understanding what type of services you know, are even available. And this comes down to this, you know, topic of financial literacy. It means that the world is so complex and services out there, banks and loans and mortgages and investment or using a little app or not using an app to invest are so complex that we don't understand them. So we need advice in making that more simple. And, banks, we know from all of our studies, consumers trust banks. They just don't think that they're really helpful. If the bank really says something, we're like, okay, you're a bank and I trust you. But, they're not using that trust in the right way. So there is a lot of possibilities in this education and teaching and, being proactive in helping consumers sort of understand more about their finances.
Yeah. So do I understand you correctly that people trust that banks don't steal money, but they don't trust their advice? I mean, I'm putting it very brutal here, I know.
I think one thing is for sure that people don't understand what banks do with their money. That's one thing, but that's not part of the problem, because we trust banks. We trust banks. I mean, I trust to put my money in a bank. That's not the issue. I don't know what they do with my money, but as long as I get my money, that's fine. What we don't think is that they are innovative, and we feel that they are not approachable and they are not supportive of us. So, and this is a big opportunity area for the banks, is to play on that trust, but actually go closer to the customers and innovate on the service propositions.
Thank you. There is a question about, is it difficult for a person? Is it difficult for a person to switch between banks? In matters of money, people are more likely to behave conservatively. So maybe this is one of the reasons.
Yeah, I think traditionally it has been. I mean, the challenger banks are making opening bank accounts like incredibly easy. You can have a bank account in 2 minutes, and by taking a picture of yourself, and pretty much that opens a bank account. Traditionally, it used to be a lot more difficult. I think changing bank accounts is quite easy, but if you have any loans or investments or stuff like this, then it becomes extremely complex. And I know that especially in the UK, I know a lot of people that, for instance, people that live together, that are a couple, if they've created a new account for themselves, like a joint account, they choose a challenger bank because it's easy to open a joint account, whereas it's extremely difficult to open a different account with 2 different people at another bank. So I think there is this, yeah, but I mean, we need to also say that we are not a financial services provider, and whether it's easy or not is a question that for some people it might be easy, for some people not. But I think traditionally people stick with their bank for a long time, unless they lose sort of the trust in it.
Thank you. And maybe the last question is, again, I mean, we don't need like a scientific answer here. It's rather your opinion.
You probably won't get one, but I can try.
Yeah. I mean, just an opinion, because you worked with many banks. How do you feel? Are there traditional banks that have enough, I don't know, guts to become these innovative advisors in terms of finance, or there is a high probability that some of the challengers will take this space? What's your just experience of working with banks?
I think that we know that traditional banks need to do something, because if they don't, the challenger banks will. And if I would say that the challenger banks are not thinking about going into the investment and the mortgage business, I would be lying, because they are. But the problem is that as we surfaced, currently people still trust the brick and mortar banks a lot, and putting significant investments into these challenger banks is still sort of questionable, and we don't have a lot of use cases of that yet. It might come, but currently, it's always the same with any type of innovation. There is this time period of this sort of early adopter and innovator, and these are the people that will get this sort of competitive edge. Right now, there is market to be taken. There is space for innovation within traditional banks. And one thing we need to understand is also that these challenger banks don't have physical locations. So it is a major, yes, it makes them more agile. It is a really sort of massive point in their P&L, so they don't have the cost of that. But it's also a huge opportunity area for traditional banks to convert their physical spaces into something that provides a lot of value, because the challenger banks don't have these unless they start opening branches for a specific reason. So I think I don't have a real answer for it, but I think that there is still time. There is opportunity globally to take really positive sort of leaps in that space. The Canadian bank is a really good example of sort of already doing in there. It's definitely not saturated the market, and the challenger banks are definitely thinking about it.
Thank you. I believe this is also true for Ukraine, because I've seen already several banks looking attentively at this opportunity, and given the high level of competition in Ukraine, I believe some of them will be definitely playing this card, which is great, and all customers will benefit from it. Timo, once again, thank you. It was, in my view, a brilliant presentation to wrap up and finalize the service design. We went beyond the typical customer journeys, tools, and methods, and more on the strategic level and application of the service design. Yeah, I support. I mean, many people put comments that it was a beautiful presentation, and it helps to understand the market better and the place for the service design on the market. So thank you very much. It was an honor. Thank you for everybody for being with us during the service design marathon. It was a big pleasure to see you, and staying in touch. I believe this is not the last time we have a wonderful speaker, and hopefully Timo could other time share some of his thoughts on other markets as well. Thank you very
Absolutely.
much.
Thank you for having me, and have a lovely evening. It's been a pleasure, and all the best. And if you have any questions regarding what I just shared, my contact details were on the slide a while ago, and or you can reach out to Oleg. I'll be happy to have a chat.
Super. Timo, once again, thank you, everybody.
Thank you so much
for joining. That was an interesting discussion as well. Bye.
Thank you. Bye-bye.